Therefore, a look into the future provides a good foundation for what needs to be done today, such as 1, implementing relevant corporate governance principles and appropriate controls. 2, investing in the right tools. 3, promoting professionalism and sound business practices. And of course, very important is investing in human capital development. We want to thank our keynote speaker, the panelists, for taking time out today to making our annual summit a success. When the council approved the theme Digital Revolution, Opportunities and Value Creation, we had no idea that such a thing as COVID-19 virus will ravage the whole world, and that we will need even more, we need to rely even more on technology. I hereby encourage you, our dear colleagues, to sit back, have an open mind, and prepare to be taken into an important journey into what can be a renaissance in the banking industry. I would like to conclude these remarks with a special appreciation to all member banks for their understanding and cooperation during the process that led to the regularization of the association's corporate status with the Corporate Affairs Commission. Once again, thank you, and God bless you.
Thank you so very much, Madam President, Mrs. Osarati Demarin. Thank you for that interesting opening speech there. You took it off rightly. I was excited when you said that you thought about this topic came about even before COVID-19. In the spiritual world, we would say that was spiritual. You were forward thinking. The council was forward thinking, and COVID-19 has come, and then this has brought about this conversation around explosion in digital space. I mean, a year ago, we wouldn't have thought that we'll be having this meeting virtually, via Zoom or via the web. We would have gathered somewhere in a hotel or a rented hotel with so much to eat and drink and then so much to talk about. But it's a good way. That is the conversation we have today at this point in time. Okay, it's that time where I invite the keynote speaker. I'm talking about Mr. Folashodun Adebisi Shonubi. Mr. Folashodun Adebisi Shonubi holds a double master's degree, respectively, in business administration and mechanical engineering from the University of Lagos. He is a resourceful banker with over 30 years of professional experience prior to his appointment as Deputy Governor of the Central Bank of Nigeria. He was the Managing Director, CEO of Nigeria Interbank Settlement System, popularly called NIBS PLC. Now, Mr. Shonubi also worked at Union Bank of Nigeria PLC, NBC International, First City Monument Bank, and briefly at Citibank Nigeria. He has also served on several boards and committees. Just to let you know that Mr. Shonubi is the Deputy Governor, Operations Directorate at the Central Bank of Nigeria. Ladies and gentlemen, your keynote speaker, Mr. Shonubi. The floor is yours.
Thank you very much. Madam Chairperson and my bon, it's a pleasure being here. And when you started this journey inviting me, like someone said, COVID wasn't in the works, but it's the reality of life. The other irony in which I disagree with the Master of Ceremonies, there's nothing spiritual about digital revolution. The pace may have been changed by COVID, but it's a reality that has always stared us in the face. And while Madam Chairperson had taken the route of regulator on to being on the board of a commercial bank, I've done the reverse. And I think my 20-page presentation would be slightly different from what the panel will bring, but I'm hoping there'll be enough there to ginger our thinking. For I don't have answers for you. I usually end up throwing questions that get you to think. Your responsibility, as was mentioned by Madam Chairperson, is to protect interests, and you protect the interest of shareholders, you protect the interest of staff, those who are in the banks, We, on the other side, protect the interest of a larger group, which are the citizens. Banking is a privileged industry, and that's why it has to be licensed. So if we can start my presentation, please. It's only about 20 slides, it's not a lot, but I hope you find it interesting. Please, let's start the presentation. Thank you very much. So we're talking about digital revolution and the opportunities for value creation. Next slide, please. Okay. This is just the outline. Next slide, please. So digital revolution, we all have a general idea of what it means and what it is. And generally, it's considered the use of information and digital resources. It usually suggests that technology is somewhere behind it, and it talks about new ways of doing things. The truth is that banking has always been more or less the same. It's the methods which we have used that varied over time. It's the risks that we have taken and how to manage them that have varied over time. But fundamentally, they're about providing service to people. And while the historical definition was about taking money from locations or people that had surplus and then passing it to those who have deficit, in reality, it was about providing service to people. And the earlier days of banking had nothing to do with lending. They had to do with moving money around. You go to a money lender, he gives you a piece of paper. And when you get to the town you're going, you give that note to another money lender and he exchanges it for cash. So all over time, up until today, it's more or less been the same thing. Very basic, providing service to people that are the of our mind, because sometimes as we get carried away and we think it's about coming up with some fancy product that satisfies our ego, rather than about providing service to the customers. Next slide, please. So on the digital revolution, again, quickly, it's about the technology that we use to bring intelligence and some thinking that initially was in the purview of just human beings. The ability to take large sums of data and see patterns in it, learn new insights from it, and therefore take decisions from it. And there are tons of them. I'm not a techie, so I'm not going to spend too much time. I'm more about people, as you can guess. But it's important to understand that the digital revolution has been on for a long time, from the days of Babbage, with his most rudiment of calculators then, on to more recent ideas of thinking like the human and having computers that are very different from what we think now. Again, the technology is never the issue. It's what we use it for. And as you talk with banks, either being on the board or being part of a board, please let them not use the lingo of technology to confuse, because everything at the end of the day breaks down to a very simple fact. We're serving customers, we're creating value, and for shareholders, we're keeping value or retaining value. Next slide, please. So I want to share a rough idea of what the balance sheet of the banking industry is, just to bring out a few points, especially in these days where the central bank has been accused of so many things. And it's important we begin to get a feel or understand. So the few key lines for me on the asset side is to look at the lines that have had growth. Claims on private sector, in essence, is your loans. Claims on government, you can see up there. And then below you have the liabilities, which is capital, and then you have your time deposit, savings deposits, which between January 2017 on the deposit side has grown from 18 to 23 trillion. That's roughly about 7 trillion. But what have banks been doing since then? I think looking at the balance sheet, and I don't worry too much about the P&L of banks, even though if you look at the industry, the area where there's been more growth has been on fees and commission. And that's understandable because interest rates have generally been dropping and banks have tended to find how to debit customers for excuses using fees and commission. Again, the reason why I don't pay too much attention to the income statement from experience in the 90s when we had a high-flying bank that used to declare a lot of profit, and then we found out that their Port Harcourt branch was taking money from customers as deposits, debiting cash and crediting income rather than liability. So I tend to look at the balance sheet, since activities that reflect on the balance sheet are what translate to income at the end of the day. But just a small digression. But when you look on the asset side, claims, which is loans, had grown from 14 trillion to about 14.5 trillion. But look at the claims on the central bank, which was our OMO bills, that grew from 835 billion to 4.5 trillion roughly. So really what we've been seeing in banking, at least from the central bank's point of view, is intermediation of government. It's not even intermediation of customers, it's intermediation of government, whereby significant growth in deposits from individuals are transferred to government and a spread made, and that was banking. Now remember that I started by saying we have the interest because it's a license that's given out. So the interest has to be beyond that. It also has to involve how we impact, how we touch on people, because that's the basis of banking. Next slide, please. And please bear with me, I'm going somewhere. If you look at the foreign currency balance sheet as well, which is what we have here. Holdings of foreign currency, which is the top line is really cash. But then the shaded ones are the loans and advances as well as the deposits. And you see the loans and advances growing significantly from 5.9 to 7. And then you see the deposits growing from 5.2 to 6.2. And so there's a lot of funding coming up from elsewhere apart from the deposits that you have. Cash has remained relatively flat, not a big deal. Now, what I find interesting there is the penchant for foreign currency lending and the issue of the risk you're taking when you look at the balance sheet on where the funding is coming from. Everybody would like to do foreign currency borrowings from the bank because the rates are meant to be easier or lower. And the flip side is that you have to then look for the money from somewhere. Now, if my main activity is generating income from Naira, somebody carries a significant exchange risk. And while the banks might suggest they're not the ones carrying the exchange risk because their agreements with the customers is that at any point in time, they can either convert it into Naira or they can debit the customer and buy dollars. The reality of the times is that the ability to get people with Naira means of income to convert it into dollars to liquidate an outstanding dollar obligation is not as they said it was. And so when we start looking at what banks are doing, it's important we also realize that it's not just what they say that's key, but the common sense of what's the risk that they are carrying. And I've been a banker for going on 30 years. And we're among the best salesmen in the world. And especially when you get to the board, we do have a lot of big words that are confusing. But bottom line, again, is where's the customer in all this? Because that really is the basis of banking. So these are the big numbers we'll always show you in the boardroom. And then we'll show you trend, and then we'll show you all those nice fancy slides. But really, let's break it down. Where are the people? Because banking without people doesn't exist. It's not about technology. It's about the people. And we are not seeing that. Next slide, please. Okay. The last bit before I start talking about the people is there's been a lot of complaints that we're being forced to lend. We shouldn't be lending. It's going to affect our loan book. It's going to affect the quality of assets. It's going to translate into everything else. And I hear, and in some ways I agree. But the question to ask is, from a profitability point of view, we were looking at the balance sheet before. If you look at Nigeria and then look at some other select countries that we normally track against, the main lines I'm looking at are return, not capital adequacy. We all have good capital. Return on equity, we're doing 22.4% for the industry, while Kenya may be doing 24, an outlier, Malaysia 10.6. Return on assets, we're doing 2.0. Turkey, South Africa, and Angola doing 1.2. And then we have the loan to deposit ratio, which is much higher in other places than we're doing here. So when we look at the people, we're not serving them, we're not giving them, we're not helping them out in times like this. We're showing significant profitability in an environment or a situation where everybody else says that it's almost impossible to even break even. And we don't have the best of reputations on how we manage our customers. Then we do have a problem on our hands. And I'll show you what the KPMG customer satisfaction report says about service in the banking industry. Because whatever we are aiming to do with technology, with anything, it has to always be about the people at the end of the day. Next slide, please. So this is the whole intent and how it translates from change to different areas. Typical slide. Can we move to the next one? We're going to hear a lot about digital transformation and the techies, but it was necessary that I also put what the techies say. So let's just move on to skip the next slide, and then let's go to where it gets interesting, when we start talking about people. Yeah. This will be shared, so bites. I'll let it's interesting. Thank you very much. So who are these people that we have as bank customers now? Largely the people that we are carrying around, as you can see, is a lot of inactive accounts. We push, and there seems to be significant growth in the number of accounts in 2020. But all this only becomes meaningful when you have an idea of how many customers do we have. And the best way of measuring the customers of the bank is to look at the BVN. But before we do that, which is the next slide, an interesting thing that comes out here is that the number of inactive accounts, since we're relatively flat. So we get in new customers, and we have roughly the same set of people that their accounts have gone stale. Now, when we say inactive, by practice, after a number of years, the accounts are taken off. So they're not even classified as inactive. So it means as we're taking customers off, a number of current customers are going into the same bucket of inactive. So it's not flat because it's the same people. It's flat because after a while, by my own interpretation, we do have people that are not interesting to us again, because for some reason they're not satisfied and they leave their accounts and their accounts become inactive. And then after a number of years, we close their accounts, we take them off our books, but another new set come in. So that gap has just remained roughly around the same as it is. If we have about 65, if you look at July 2018, we have roughly about 70 odd 75 active accounts, and then we have about 110 inactive. So that's about the 25 million accounts. Now, these are accounts, they're not people. The next slide is where it begins to get interesting. Next slide, please. This is what extracted, and this is now where we start seeing the people, which is what BVN represents. And between 2018, September and December 2019, we've had 5 million people enrolled, 5 million new people coming into commercial banking. But what is more interesting is the line that says active, and the information which we got from NIBS, thank you very much, tracks BVN and activity across banks and how many of them are unique. And you find out that the numbers haven't grown as much. So we are piling people on. We are adding customers, but it's a small number of them that are really active. For some reason, a lot of them are not active. But we've also thrown the best of technologies every time at them. But the net return based on engaged customers, it's not the bottom line based on profit, it's showing diminishing returns. And the question is why? Well, I can't answer that because each institution would have its own issues. But from an industry point of view, this is not very pleasant. Again, let's look at the population. They say we're about 200 million. Out of 200 million, easily 60% of the population is economically active. 60% is about 120 million. We have 40 million of them here. So that leaves another 80 million. Anyway, we cut it, even if half of those numbers are in rural area or are dependent on you and I for things, we still see a massive gap of 20, 25 million people that are not reflected here. So the question is why? And the truth is that it's easier, I know, to get more out of existing customers than to acquire new customers. So the truth is, what we are finding is competition amongst the banks for the same set of people. So something must give, margins must give, because you're soon going to have to start engaging in price discrimination. Since from a technology point of view, I can easily copy your technology within 3 months. I just need to know what you're doing, go online, and I'll get, if not the same person, someone similar to provide same types of things. So we need to start thinking about it from our customer and not just a bottom line conversation. Any changes, any revolution that we're doing has to be about the customer. It's not about technology and the bank. Next slide, please. So to give you an idea, and we used POS, try to track top and bottom footprints of merchants and the activities that they have. And what do you see? Lagos, as to be expected, the South generally, and Abuja are the ones that are high up there. And then the red, which represents large parts of the North, are the ones that are at the bottom. But what I find interesting, if you look at it, is Borno State. 2018, extreme right, that's Borno State. 2019, Borno is not among the bottom 5. Because there's been a lot of activity in Borno, because there's been a lot of the activity driven by the need to have non-cash related activities. So the NGOs, the interventions, they've tried as much as possible to make them digital and to bring people there into banking. And it shows what is possible, because Borno is still one of the poorest of states in Nigeria. We still have the cluster around Sokoto, and you have more or less the usual suspects down south. So everybody is fighting in Lagos. The volumes have grown from 67.8 million to 91.5 million in Lagos. Nice. They've gone up slightly for everybody. Good. But still the same people, more or less, because those are the only ones that were banking. Add the population in those states together, it's less than a third of the population of the country. Even with Lagos State saying they have 28 million people in Lagos. Next slide, please. Then this is from the KPMG Banking Industry Customers Survey. And they looked at retail, SMEs, and wholesale about what's important to them. And what comes across every time is quality of service experience. Experience is a personal thing. Experience is something you see and feel. Experience isn't what people tell you. Experience isn't what you have in an advert that says this is the best product or institution in the world. It's the same for all of them. Maybe more for some than others, but it's the same for everybody. And then when you look at channels, the gray area represents the more gray you see, the less usage, as you can tell, because the gray is the never. And you see branch for all our technology is still important, and ATMs. This is from the KPMG survey. Internet banking for all our hype is still about 35% of the recipients. Mobile banking, a lot more. That's about 58%. That use it in some form, shape, or manner. And USSD, even a lot more people use USSD. About 67% use the USSD. Contact center, chatbot, part of the new wave and new age, they're still not that important as channels for interaction. The key ones still remain branch and ATM. And when they say ATM, indirectly, it is still branch because almost all the ATMs we have are in the branches. So from a customer point of view, the way they interact with us are all the other colors except gray: USSD, ATM, and branch. So if we want to reach them, we need to be clear what we are doing. It's not what's the hype. I have my bot, you call, and one nice voice is telling you things. It's what is meaningful to them. You either encourage the customer to move on the channel that you like, but you don't impose. I do banking. I don't do online banking, any bank in Nigeria. And the reason is simple. Every time I'm giving access to do online banking, it's at a cost to me. I'll pay for my token. I have to go online and use my resources. And then any mistakes I make can be blamed on me. So I ask, what does the bank give me in return? And the answer is nothing. I don't get cheaper services for being online. I don't get discounts for being online. And so the question I ask is, why should I then be online? Because the conversation I have always with the banks is about what they want to do. And it's something we need to change the conversation from what is nice and shiny to what makes sense, because we do not have as many customers as we should have. So branch is still relevant, ATMs are still relevant, and USSD is very, very relevant. I'm not saying the others are not useful, but you can see the relative importance they have as channels for communication. Please read the KPMG Industry Customer Survey. It's very interesting. Next slide, please. And then they summarize everything into overall customer experience. And it's downward for the banking industry. 2018, 2019, everything 2019 for all segments, wholesale from 71.2, the score to 67.3, SMEs down, retail down. And then when you look at likelihood to recommend, likelihood is the dark blue. So if 33% are gung-ho, that's 67% in retail that might or might not recommend, that are not feeling great about their banking relationship. And it's the same, wholesale is even worse, SMEs are bad as well. So one issue is customer experience that technology alone cannot solve. So when you hear people talking about throwing technology at it, it's addressing a question that may not be asked. The real issue is, what does the customer want? And then how do we best provide it using technology? It is not what technology is great that we should get the customer to get onto. Next slide, please. So again, we'll try to reflect that many of them are not active electronically. That's what's shown as the gap between the potential and the actual, between the number of accounts that you have, active accounts, and then the number of people. There are a lot of people who go to the ATM and don't do anything else. For all the apps we've given them, all the downloads, all the star XYZ, more of them still go to the branches, more of them still go to the ATMs than use those things. Why? We need to ask them what they would like, not what we would like them to do. Next slide. Again, highlighting some of the service issues with technology. So you see, and I try to get some efficiency, because one of the measures of service that people have always complained about is failure, crashing, not being able to do certain things. And the easiest one to look at is NIP, because it's meant to be real time, and the volumes on it are more than any other channel. But the complaints, the problems actually are the banks. Most of them. If you look to the right, contribution of NIP transaction failure, you see a lot of banks, especially destination banks, that are providing the headache. And you know what the irony is? When you're at the destination bank, money is coming to you. But somehow those who are receiving the money are the ones that seem to have the biggest problem, rather than the other way around, where it should be the people who are sending the money out. So we've built a lot on our customers reaching us, giving us instructions, sending things out, but we've forgotten that they're also on the receiving side half the time. When you're sending, somebody else is receiving. So we have been looking at things one-sided, like flying with one wing. Next slide, please. Okay, and then POS, you look at the same. Next slide. Okay, so this is to highlight an issue which is important, which is risk and fraud. Okay. Again, nicely got from NIBS, where they track the volume of fraud and the number of incidences to come up with something that was called a fraud attractiveness. And we find ATM, that was also one of the most used channels coming out there. Bank branches, which is across the counter, is pretty low. Mobile, highlighted red, like a red flag sticking out, and then web. So even the electronic channels are the ones that are more interesting now for everybody. And you can see why. I can do it from my house and pretend I'm in America. I can receive, send, and share with anybody, anywhere in the world. And it's faster and the money is gone, and that's about it. I'm not saying we shouldn't, because it's a question of time. Dinosaurs like us will fade away slowly, and then you'll find maybe the younger or the more active people using all these channels. But when I look at it as a customer, what it tells me is that I have a 20% chance that I might have an issue with my mobile banking service. And so why should I use it after a while? Now, the problem with the ATM is I can go to the branch, but they're going to send me to the ATM. But I'm also there a lot of the time. So we need to look at what it means to the individuals, to the customers, when we're pushing out all the things that we call technology. What does it mean for them? I can go technical now and reel out all the possibilities from AI to what have you. But you have a very interesting panel, because I've looked at the participants on the panel, and they would more or less tell you what is possible. What I'd like to end with is to share that at the end of the day, it's still about the customers. Everything is about them. It's not about the technology. Too much of the conversation is about using appropriate technology. But the question is appropriate for what or for whom? That's usually not answered. They say the value of a company, as reflected on the stock market, is the present value of its earning streams. At least that used to be classical finance. Unfortunately, these days, it's not exactly that, because your fundamentals may be brilliant, but opinion, impression, and image count so much more these days than they used to. And the easiest way is by word of mouth. We constantly see in the central bank customers sending complaints. I used my ATM card, my money was held, I didn't get it back for 3 weeks. What do you think will happen when that person gets his card back? He will try to go to the ATM as few times as possible. Go once, take out all my money, and go back to cash. So whatever we're doing, please, let's try and tie it into how it helps the customer based on the things they want, rather than what we think is the best technology. I hope I've been able to get you a bit interested. Thank you very much.
Thank you so very much, Mr. Folashudun Adebisi Shonobi, Deputy Governor, Operations Directorate, Central Bank of Nigeria. Your keynote speech is quite touching and quite inciting. I really want to believe that this would go a long way in ensuring customer satisfaction within the space going forward. My takeaway here, which is where you landed, is the fact that it is all about the customers. It is all about the customers. Whatever we do in terms of the revolution that's been talked about, it's about customer satisfaction. That is my takeaway here, and I hope that will be the takeaway for quite a number of us on this platform this morning. Thank you so very much for your time with us. We appreciate your keynote speech. Quickly, let's go into the panel session. The way it's done in the normal event, we would have to introduce the moderator, who would now introduce the panelists, but on the virtual space is a different setting here. So I will do the honor of inviting all the panelists, while the moderator would moderate the session. So for our panelists, I'm happy you said something during your speech, Mr. Shonobi, where you talked about the fact that the composition of the panelists is quite exciting. They're going to bring quite a lot of answers to questions that's going to be asked today. So let's begin with Mr. Boye Ademola, who is one of our panelists this morning. Mr. Boye Ademola is a partner and lead for digital transformation at the KPMG in Africa. He is the convener of KPMG Digital Summit and author of several publications. He is the data and digital economy lead of the National Assembly, Business Environment Roundtable, an independent board member of a leading fintech company, and speaker at various international conferences. Mr. Boye Ademola, welcome to the program.
Thank you, and good morning, everybody, and thanks for having me.
Yes. So our next panelist is Mrs. Christabel Onyedekwe. Mrs. Christabel Onyedekwe is the Executive Director of Business Development at the Nigeria International Interbank Settlement System, NIBS PLC. She has over 27 years of core banking and financial industry experience. She played prominent roles during the consolidation of the banks in 2005. Now, Christabel holds an MBA in Banking and Finance, a Bachelor of Law degree, and has completed several executive management programs at top international learning institutions such as Wharton, MIT, INSEAD, and Harvard. Mrs. Christabel Onyedekwe, welcome to the summit.
Good morning, everyone, and thanks for having me.
Good. Okay, next will be Mr. Akim Lawal. Mr. Akim Lawal is the Divisional CEO Transaction Processing and Enablement at InterSwitch. He is a member of the founding InterSwitch management team. Mr. Lawal has over 22 years experience in the implementation and management of projects in the financial service sector, information and communication technology, as well as the oil and gas industry, and is responsible for some of the innovations driving the payment industry in Nigeria today. Mr. Akim Lawal, welcome to the session.
Thank you. Thank you very much, and good morning, everyone. I'm happy to be here. Good
morning, one more time. Okay, it's that time where I introduce the moderator for the session, none other than Mr. Segun Adeniyi. Mr. Segun Adeniyi is currently the Chief Digital Officer for Wema Bank PLC. He's active and passionate about developing the tech ecosystem within the Africa continent. Prior to joining Wema Bank, Mr. Adeniyi was head of Africa FinTech Foundry, where he drove a series of technology partnerships across a number of industries segments, as well as led the delivery of a number of innovative solutions, transformation to digital bank and adopt a new wave of customers. Mr. Segun Adeniyi, moderator for the session. So good to have you join us.
Thank you very much. Good morning. I'm excited to be here. Good morning.
So
Thank you.
It is that time where I hand the baton over to you, Mr. Moderator Adeniyi. So the floor is yours. The session would hold for 30 minutes. So I will be your timekeeper for the next 30 minutes. The floor is yours, Mr. Adeniyi.
Thank you very much. Good morning once again, everybody. Thank you for being part of this morning. I look forward to some interesting and exciting session or discussion as part of this. I think to kick off the keynote speech, thank you very much, Mr. Shonubi, addressed the digital revolution and the state of banking across Nigeria. So there was some very interesting insights shared from a very compliant and market-connected regulator. Mr. Shonubi, thank you for that. For this session, our focus today remains aligned with the theme. We will discuss about digital revolution, what it is and how we have evolved into the fourth industrial revolution, its impact to our daily lifestyles, and of course, impact to the financial services industry in entirety. Our panelists will share some insights on the opportunities that lie ahead, as well as how we can create additional value. Ladies and gentlemen, I trust that you will support me to make this an interactive and rich discussion, supporting specifically with solid and impactful questions to keep our panelists, actively engaged. Due to time constraints, we may not be able to answer all of the questions, but I will do my utmost best to ensure that most of them are addressed as part of the discussion today, and I crave your indulgence for this. So once again, I welcome all our panelists, and I look forward to some interesting conversations today. So the digital revolution, as we know it, marks the beginning of the information age. It started as a shift from mechanical and analog electronic technology to digital, with the adoption and proliferation of digital computers, digital record keeping, and that has now become the norm for us. That continues on till the present day. Of course, it has driven changes brought about by digital computing and communication technology since about the middle of the 20th century. And if I was to attempt to define it today, my best attempt would be that digital revolution is an ongoing process of social, political, and economic change that has been brought about by digital technologies such as computers and the internet. If we try to lay our hands on how that has evolved over time, you will agree with me that each revolution is characterized by its ability to transform economies, jobs, and even society itself through the introduction of new technologies and processes. 3 revolutions have already changed the system. We're in the 4th one. The first one took place at the end of the 18th century and was characterized by the power of water and steam. The second one was the introduction of the electrical power and production lines, which enabled mass production of goods based on division of labor. The third revolution, which started around the mid-70s, has continued until the present day and is characterized by the use of electronics and IT to drive automation of processes. As things stand, today we're experiencing the 4th revolution, which is our present and our future. And this will form the basis of most of our conversations today. It is generally characterized by automation, and it describes the exponential changes to the way we live, the way we work, and the way we relate to one another due to the adoption of these IT systems, the Internet of many things, and of course, the Internet of systems. Mrs. Onyejekwe, you will agree with me, it is disrupting almost every industry in every country and creating massive change in a non-linear way at unprecedented speed. Can you please share your views on some of the promises of the 4th industrial revolution, especially as it partakes to players and consumers within the financial services industry? Mrs. Onyejekwe.
Okay, thanks, Shegun, and thank you once more for having me at this year's Banks Directors Summit. It's indeed a privilege. A lot has been said by the chair, Mrs. Demorin, and then, of course, our dear DG, Mr. Ade Shonubi. So quickly to your question, as you rightly put it, it is our present and our future. That is the Industrial Revolution, because we're actually all living in it right now. Putting more context to it, you want to look at the new ways in which technology has certainly been embedded in the things of society and ourselves as individuals. So you find that all of us have been radically changed because technology has changed everything. And it brings to bear the physical and the digital worlds, bringing them together. So we've had buzzwords like AI, IoT of intelligent things, blockchain, robotics, 3D printing, nanotechnology, AR, that is augmented reality, VR, virtual reality, cloud computing, and the most recent controversial 5G technology. So when you hear these buzzwords, it makes it look threatening and, of course, scary. But the good news is that these changes are being catalyzed by the consumer, you and I. That is the changing consumer, which has derived from the gains of the 3rd revolution, albeit in the demands and the choices of maybe what they have to need around online, offline, data, and logistics. So this has compelled the changes that we have witnessed so far from the Industrial Revolution. Now, to the promises. The promises, there's no doubt they are quite exponential in terms of productivity as against the linear productivity line. Why is this so? We imagine that we'll be seeing a lot of skill and efficiency. It will bring about global competitiveness. That is, in the world before business schools, when you go to business schools, we hear about cost and differentiation as being contributors to competitive edge. That means you find that you are either on a cost reduction or a differentiation leg. But Industrial Revolution has brought about the and of the two, that is cost and, of course, cost and differentiation. So to what's happening out there, you find that it's going to improve the B2B2C discussion. We have the models in China, for instance. You have the Alibaba, where they have used the ecosystem to create the e-commerce platform that connects everything. And in America, we have the Goldman Sachs business model, where again, it transports agility into the processes of their businesses. So clearly put, If I may just quickly go to what Ade Shonubi said around the financial services industry. We imagine we have currently 22 banks licensed, 2 AIPs in view, 889 MFBs, 40 PMBs, the new 3 PSBs, and the list is ongoing. So with that, how do they interact? It's already an aggressive and intensive market. How do you interact with the customer? I think that's the biggest question. And I want to make a quick quote here by Satya Nadella, is the current CEO of Microsoft. And he quotes that it is always those who are learn-it-alls that will do better than know-it-alls. So in the wake of all that's happening, the source is when business and technology kind of merges and moves at the same space to attract and speak to the consumer needs. And I think it's the moment that everyone in the room, our consumers, and of course our players in the room, to latch on and take the moment. Thank you.
Thank you very much, Mr. Ejekwe. I like that that quote about learning it all being better than the do-it-alls. And I think there are a few things I would take away from that into some of the questions that come later on. Thank you for that. Mr. Demola, it would be interesting to hear your thoughts likewise on the promises that Mr. Ejekwe has just mentioned, as well as the challenges that you believe the fourth industrial revolution brings to financial services industry and players.
All right. Yeah. Thank you, Segun. And I just want to build on what Mrs. Demery said in her opening remarks. She said there's a digital storm that is brewing. And I found that, very instructive, because if you will look at the 5 most capitalized stocks in the United States now, they popularly call them FAMAC, that's Facebook, Amazon, Google, Apple, and Microsoft. FAMAC, is an acronym. You have 5 stocks in the S&P 500. These 5 stocks, command about 20% of the market cap of the 500 biggest companies in the US. So just think about that for a minute. 500 largest companies in the US and just 5 tech companies, command 20% of the overall market capitalization. It tells you, and this is just part of what's accelerated this is COVID. For instance, Amazon's shares are up about 30%, but it tells you the scale of what we're seeing in terms of the evolution of digital and the impact on society. And I don't think we can reverse it. I think what's important is, as we look at banking, how can we use this to accelerate growth? How can we use this to deepen financial inclusion? Because, Deputy Governor was again back to this same question. We have maybe 120 million bankable adults, economically viable, and yet banks have just about 44 million, I think 40 million in the slides, but according to NIBS, the latest figure I have seen is about 44 million. So for us at KPMG, and thank you, DG, for building on those survey insights, customer experience is one of the things that we are seeing over the years, for over 10 years that we've been doing the surveys, that we need to work better at. And simply put, we look at the experience of a customer as the sum total of how he experiences a product or a service that you offer him, whether he goes to the branch or whether he does it online. So what we've then done this year is to sort of build on the insights from our big survey to then go a step further and say, from an experience perspective, let's look at what banks offer on their digital channels. And we released just last week our KPMG Digital Channel Scorecard. They're essentially looking at banks and how they offer products and services to customers online. One of the things I think that is really instructive coming out of that work that we did is we've seen banks make a lot of progress on payments, a lot of investments on transfers. We believe there's a significant opportunity to look at things like digital onboarding. And for us, digital onboarding means that we have to be able, as banks, to onboard customers, from beginning to the end without any manual interventions, without any need for them to go to any brick and mortar. That is part of our thinking in terms of how we can sort of reduce this gap that we see, in terms of inclusion. The other point that is very closely tied to digital onboarding is we focused a lot on retail, but we also see that this issue is an issue for SMEs. All right, if we're looking at our market, a significant number of people in our market are employed by SMEs, all right, not by the corporates. And therefore, being able to also onboard them and service them, digitally is an imperative for banks. So one of the key things I think is digital onboarding. The other thing that I think is really important that this whole digital revolution, brings to us is this question around how do you deepen share of wallet? How do you, ensure that we're getting more out of the customers and the customers are getting more out of the banks? And for us, that's a lot around being more contextual with, again, I think it's important to say that personalization rides on AI and artificial intelligence. But the real issue is not so much the technology, because the technology is there, like Gigi said. The issue is for us to understand the application and how to, in a sense, be more contextual, with our customers. The last thing that I would just like to say on this issue of the digital revolution is around the cost to serve. I think that there is a significant opportunity that digital is bringing to reduce the cost to serve. One of the things that you find is that as you look at, the different segments of the bank population, the population that is unbanked correctly will probably not be as economically viable as those that are banked today. But there are other sectors that service these people. Telecoms, for instance, services them, all right? So for me, I think one of the ways we look at this at KPMG is to say, look, the cost models today, the way banks are set up, we need to bring down those cost models so that we can bank these people. And part of bringing down those cost models is ensuring that, we move them to the digital channels. We're able to service them, not coming to the branches, but the branches are expensive, relatively expensive to maintain. So scaling that, to 100 million is really going to be, very expensive. But being able to move them off the branches and service them with USSD, service them off mobile and other channels that are convenient to them. Just some thoughts around that. Thank you, Shegun.
Thank you very much, Mr. Ademola. I think there are a number of things to take out of that. That whole bit about deepening share of wallets is an interesting one. And I think it takes us to something Ms. Onyejekwe spoke about earlier as well, and that's the area of platforms. So today, everybody talks about digital platforms. I think maybe Mr. Lawal, if you could share some insights around that. You've got significant experience and relentless efforts at creating robust digital platform out of Africa. How would you advise that leaders and organizations prepare and adjust to these demands of fourth industrial revolution? I will come back on more detail around your experience on platforms later on. Thank you.
Thank you, Shegun. So I think it's a question that all leaders in the banking and payment space needs to think about, to be honest. But even as Nigerians or Africans, we missed the first 3 industrial revolutions, yeah? And ever since we've been playing catch up. I do believe that we have an opportunity to at least be abreast with what's happening with the fourth industrial revolution because we have all the tools that are necessarily available to us, and we have a young population to drive it. But to answer your question more specifically, I believe that my advice to all, to the leaders and all, people who are operators in this space is to prepare for digital disruption. Yeah? Digital disruption is an inevitability. Therefore, the question really is not, is there going to be this digital disruption? Is, will you be the disrupted or will you be the disruptee? If that's a given. Why are we saying this? We know, for example, that in markets like China, Alipay has created a system that almost makes it unnecessary for customers to need to use banks. Yeah. We know that OPay has tried that model in Nigeria with some level of success in creating a system where customers can open wallet and do their live transactions without necessarily ever having to get into a bank. We know that Facebook is building a payment system that is going to be global in nature. So it's a question of when and who, not a question of if, right? Our view is that the people that will win, or the organizations that will win, will be the one that understands and harnesses the four forces, the nexus of four forces that are driving digital disruption. The convergence and mutual reinforcing nature of these four forces is what is driving the digital transformation and the digital revolution. And it's the organizations that get a handle on these four forces first and best that's likely to be successful. And these four forces are as follows. The first is social. Yeah, I would argue, again, based on the data that we have, that there are more social media customers than there are banking customers in Nigeria today. One of the ways we think about the social ecosystem is that it's almost like an entirely different country with different rules and different engagement. But the interaction that happens on that platform is as close to real life as anything that you can see in the physical world. So organizations that understand the extreme nature of social media, the ability to take a product and distribute it to 50, 60 million people in Nigeria and almost 3 billion people globally instantly, does not exist in any other platform. The ability to engage customers where they operate and use their interactions with others to drive engagement and promoting your product is unprecedented, I think is the word I'm looking for. So the first force is social, right? And the extreme behavior that comes from that. The second force is almost just as clear. It's mobile, right? With over 100 million people carrying mobile phones in Nigeria, it becomes the tool for engaging and accessing services of any nature in any industry. And again, not taking advantage of the pervasiveness of that kind of access to deliver products and services would be a mistake. The third really is around cloud and the big context. I think the world has changed in that the ability to take a product from concept to customer use can now be done in a matter of days, not months or years like it used to be. And what that means is that some of the people that become competitors to the traditional businesses do not have to make the significant investments in data centers that some of the established players have to have. And then the last one really is information. And Boye talked about this. It's really the ability to take the data that you have and take the data that is available and harness it to deliver value to your customers. And one of the best value deliveries is around customer experience. And I'll just add one thing to what Boye said when it comes to customer experience. It's trying to look at the journey that your customer takes in experiencing your products and improving the experience across the entire value chain, not just the front end, also the back end, and also the post-service support that comes out of that. Again, I believe that any organization that is able to take these four forces, right, converge them together to deliver their strategy for digital disruption is likely to win in the future. And thank you.
Thank you very much, Mr. Lawal. So if you hold the mic, I would like you to also spend some, share some insights from your experience in that whole platform space. One of the things that I want to bring out, and I think you spoke about, is, today we have, various platform owners setting the rules for the platform, but at the same time competing with, companies that depend on the platform. So, you made reference to Facebook trying to get into payments. Today, Google, Google started off with showing the results of its own comparison shopping service at the first page of its search website, search results. And of course, that rivals with all the other, sales companies who have advertised their services, their products and services on Google websites. Amazon also, gave precedence by promoting their own products rather than the rivals on their platforms. Today, banks are accelerating moves towards operating as digital platforms, becoming more interested in consumer behavior, their interests, their lifestyles, all in the bid to get closer to deepen the share of wallet of the consumers. Now, it's very easy to get into this sort of double role, thereby bringing conflict of interest. How do you advise that we deal with the growing conflict of interest around this whole concept of digital platforms in this fourth industrial revolution?
Okay. I think it's not, it's a difficult question to answer, but even more difficult to get it right? And I think the place to start the answer is to understand that the platform strategy is not the only strategy, but as Interswitch, we've chosen the platform strategy, right? There is the platform strategy, which is open ecosystems, which the likes of Microsoft have used. And then there is the closed single monolithic product strategy, which the likes of Apple have used. They are both top 5 organizations in terms of market cap in the US. So both models must be right? But coming into the platform strategy, I think, and you're right, we spent, as Interswitch, we spent the last 18 or so years building a platform model. And we think we've done reasonably well. For example, we use our processing platform to support our own product, Verve, but that same platform also supports MasterCard Visa. We use our platform for payments to support our own product, WebPay, which is an e-commerce payment gateway. That same platform also supports people like Flutterwave and Paystack. And we've done the same thing with QuickTeller. So we have a QuickTeller brand that we promote, but on the same platform, you have banks, apps using the same services from the same platform. So I will share with you what we've done, and I'm hoping that will guide or help others who are thinking in the same direction to look at what they could do as well. For us, there were 4 or 5 things. The first one really is the concept of no exclusivity, right? There cannot be exclusive contracts when you're running a platform. You cannot make something available to one party and not make it available to the other. Yeah. None for that really has to be around creating rules, the same rules for everyone, regardless. In terms of access to technology, in terms of speed of integration, in terms of price, right? Everyone has to have the feeling that they can get the same quality of service and the same value propositions as your own product if they're playing on your platform. Organizational wide is a little bit more difficult as well. We found that it's really necessary to create Chinese walls, where the organization that runs one platform cannot be the same organization or structure within the organization that runs the product. Otherwise, that conflict is difficult to manage. And I think the final one really is it's a game of trust, right? You cannot afford to break trust, right? If customers come to your platform believing that you will do certain things or that you will be fair to them, you cannot afford to break that trust, because when that trust is broken, it's almost impossible to repair. And I think the last one is basically flexibility on everything else. On top of that, everything goes. Competition is important even in a platform environment, because it helps organizations deliver the best customer experience and the best customer value proposition. And I'm hoping as others begin to go on the platform journey and they see the challenges, there might be other principles that are adopted as well. And thanks, Sharon.
Thank you very much, Mr. Lawal. I think it's quite insightful to hear those two things you said about no exclusivity and same rules apply, so no preference. You know, and thank you for sharing from your experience in that space. Let me move to you, Mr. Ademola. And I think, you know, one of the areas I would like you to speak about is something that is theming in this, you know, fourth industrial revolution, and it's in the area of cybersecurity. You know, the global pandemic especially owns the credit of being the largest agent for digital transformation globally. In Nigeria and of course globally, it has forced our banks and other service providers to rapidly reevaluate any brick and mortar processes, approaches in their processes, and of course accelerate the transition to full digital processes. This of course has increased the need for and exposes a plethora of risks around cybersecurity and digital transformation. Can you share from your experience some of the impacts and possible approaches to mitigate the negative impacts that digital transformation has on economic and social equality in the society?
All right, thank you, Shegun. Very quickly, I'll come back very quickly to cybersecurity. But I think there's on the platform discussion, I just want to mention what I believe is also an important imperative for us. Since, you know, we're talking about the Bankers Association, and that is open banking, all right? I think that, you know, we need again to have an industry conversation around open banking. The future people talk about is APIs, and APIs essentially are a way of extending your products and services in an ecosystem, all right? So that's how platforms operate. And for us as banks, I think we need to, you know, have this conversation. I know there's open banking in Nigeria, these conversations are going on, but I think we need to have, you know, what I would say would be a full industry with all the stakeholders on open banking, and indeed even codify what we want to do as Nigeria. Not, you know, the PSD like they have in Europe or you know, the framework in the UK. I think that's really going to be important. If you look at things that, for instance, when we look at our issue with inclusion, why is it that, you know, when I open an account and I provide my KYC documents to a bank, if I go and open it in another bank, I have to go through that pain all over again. With open banking, all we need, you know, we just need to get the customer's permission and have APIs that essentially, you know, enable the sharing of that customer data. So we need to have that conversation. We need to get to a point where, you know, the regulation is clear on what we want to share and how we want to share it and how we want to protect it. Now, just coming back to cybersecurity, Shegun, which is really your question, and I think that my response on this, and as we engage with directors, is to say we should expect a world where this discussion is evolving, all right, every day, all right? There is really no one way of doing it best. What I will share is essentially some of the principles that we, you know, have been sort of putting out there around how we respond to cybersecurity. But it will continue to be a big issue as we move to the digital platforms, digital, you know, media. Naturally, that's where we are going to have a lot of the threats and the vulnerabilities that we're seeing, and at a scale that can be alarming. So 3 important things that I would like to say here. Protection will continue to be important. Being able to prevent attacks will continue to be important. Banks have a level of maturity on that, and that will continue to be important. However, I must say that if you look at what has happened again during COVID, you will see, you know, to ensure that productivity was up during COVID, a lot of institutions, banks included, you have to soften your security controls to ensure that people could work remotely. All right. So again, these are all the nuances and changes that are, happening in our VUCA world, and we just need to be able to respond in a way that ensures that we're looking at this risk, we're looking at doing an assessment, and we are responding to the risk as those risks unfold. The second thing that I think is really important is response. Okay. Last week, for instance, there was an investment company that, seemingly had, another attack, and it was all over the social media. And again, it creates panic and so on and so forth. So again, we have to be able to respond. We've now moved into an ideology that, we will get attacked because you cannot stop that. We will get attacked. It's become a part of life, but we need to be able to respond when attacks happen, and to respond in near real time. All right, so that means our monitoring capabilities, how we monitor cyber operations, all that needs to be different. And then the third one will be around recovery. And for me, these three things, this is where you really get a lot of the discussion around cyber resilience. We also need to be able to recover. So you really don't want a situation where you are under attack, and then people go to your platforms and your platforms are down. You want a situation where even if you are attacked, you are able to respond, you're able to put our word out there, and your platforms are available. It gives the customers comfort. So for me, I think one of the really important things around cybersecurity now is, and Akim started to speak about that, is around digital trust. We need to be more intentional about building digital trust. As people engage on our platforms, we really have to be more intentional, asking ourselves, what are the anchors for digital trust? And some of these anchors will be around awareness. It will be around the way we communicate to our customers. If we have incidents, it will be around the mechanisms for response, the mechanisms for recovery. But the sum total of what we're trying to do is, trust is like a perception, actually, because it's the extent to which the customer is aware of what the issue is. So we just need to be more intentional in this day, about digital trust.
Thank you very much, Boy. I think that's an interesting way to land. Before I yield to Q&A, actually I should say, if you do have questions, please feel free to put them in the Q&A section. In a couple of minutes, we would start to look at as many of those questions as we can address. But before then, Mrs. Onyejekwe, how would you advise that we strike a balance between regulating competition in this fourth industrial revolution, as well as stifling innovation? So do you find that there are regulatory challenges around that stifle growth and innovation in the fourth industrial revolution? And what would be your recommendations on how we can strike a balance with that?
Shegun, thanks for your question. I hope we all know I work for NIBS and not CBN. So clearly, when you ask me that question, I have to try and situate it somewhat. Okay. Well, we believe that clearly the digital revolution is spreading at different rates and maturing at different rates in most countries, organizations, and so is also their regulation. Again, this became very clear when a lot of countries responded differently to COVID. And clearly from the post-COVID activities or measures, you could see that countries like Mexico, China, and even our own African country, Egypt, kind of responded positively to maybe in the banking space, reducing interest loans, rates, and all of that. But back home here in Nigeria, I think we're very, very, very lucky and privileged to have an innovative Central Bank of Nigeria. And please, I am not biased here, trust me, because there are some governments where you have the wait and see government regulators. CBN is not that. And I personally, and I think Akim too, we served on the Vision 2020 Strategy Board of Central Bank of Nigeria, which attempted to push Nigeria in the forefront in the 2020 FSV vision strategy. And I think proudly we can say we've met most of it. Fintechs are more in the arena, and there's more collaboration working across. So, I mean, talking about it, if the dilemma, regulatory dilemma is real. And to speak to it, if you're looking at balance, the two sides of the coin must be weighed properly. One side of it is the players, the other side is the regulator. On the player side, I mean, again, the underlying issues, I think Akim and Boye spoke to it, the underlying issues like legal, regulatory risk, cyber security, consumer protection, there's a new NDPR, GDPR perspective, AML and CFT regulation and all of that. However, innovation must thrive. So on the side of the players, we would say that they should continue improving on the usability, on the reliability, and of course that trust. The digital trust behoves on them to put a proper security in check to be able to deliver. Now, on the regulatory side, we think a lot more, and I think CBN is coming to speed on that. Recently, they came up in June with the industry regulatory sandbox framework. And that speaks to the fact that they are quite agile. So we have to have active participation by the regulation. And again, they need to support the RegTechs, the lab, hackathons, and all of that in the ecosystem. They have to be, that's regulation now, they have to be more agile. And I think Boye said it, when we have to deploy APIs, open banking must be mandatory. As the PSD2 document comes to fore here, it's like it has to be enforced one way or the other. So we want to look at, how they can have more intergovernmental agency interaction, whereby bodies like NIMC, NCC will have to come together to determine what we can do for the ecosystem. They should be able to mitigate cyber risks. I mean, clearly, again, they have a document on the industry SOC that is likely to be out very soon. This way also, they will always attempt to work on their staff competencies. You can't give what you don't have. You cannot go and be supervising banks or fintechs that have it all or know it all. Meanwhile, you're still back in the total. So it's important that we are all in the same space. So I guess their focus really should be in the changing world around payments. You know, we have the financial management, you have customer relationship, and of course, data analytics. The DG spoke to the gaps in the system. These gaps are real. We have 43 million, actually the number is 43.3 million BVN today, from a 99.6 million adult population of Nigeria. That's already a gap. We have 185. Can you hear me, please?
Yes, we can.
Okay.
Yes, we can. Yes,
we have about 185 million subscribers in the ecosystem. That speaks to some gap. And when I did share these slides, they said 45% of the SMEs are wanting to be converted, on their service chain. And that is around 41.1 million people asking to be served. So if we take some numbers, as we speak today, we're told that about 89% of people don't even know about the agency services. Meanwhile, over 70% have mobile phones. So I'm not speaking to gaps, so that there are layered gaps that we must all attempt to work to, at least from the regulation part and of course the players and consumers in the financial services industry. So if there's a truth that goes with the year 2022, which is very close, we're told that 85% of the consumers or customers may never need any human interaction by that year. That is disruption. That is digital revolution. So we should all attempt, to be able to collaborate some more to achieve the best at the right time, especially right now. So I see the dilemma to be ongoing, but the more interaction we hold in the ecosystem, I'm sure based on the achievement of the 2020 Vision 2020, we can actually attempt to close most of these gaps as noted by the DG. Thank you.
Thank you very much, Mr. Ejekwe. Quite interesting to see how much work is already going on there. But you know, the jury is out. We continue to encourage our regulators as they also deepen their own knowledge about the new technologies and how to support. And I'm sure the industry will support because it makes it a more level playing ground for everybody. Anyway, thank you very much. Thank you to our panelists, and thank you to the audience for listening. I think at this stage, I have to wrap up the session with the panelists and yield to the Q&A session. We already have a few questions that I will have to pose to the panelists. I think the first one, which Akim, I will pose to you if that's okay. And maybe Mr. Ejekwe could speak to it as well if she has any additions. And it's a question from a name that I recognize. Mr. Samuel Durojaye says, from the customer's point of view, why can't we have an ecosystem that allows a customer to access his account in various banks using BVN? Mr. Lawal, could you share some thoughts around that, please?
Thank you. I will start and then I'll pass it on to Christabel.
Yeah,
so the technology exists, right? But I don't think this really is a technology question. The ability to use BVN as a token to which you can associate bank accounts and potentially even other types of payment instruments exists today. It's tokenization technology and it's pretty secure. Making that available as a stack of APIs could potentially accelerate the delivery of new customer experiences and improve customer experiences for customers. So technology, I don't think, is the problem. But in terms of delivering that, we need to consider the implications for customer privacy. We need to consider the risks that this poses. And just to give you a context of what that risk might look like. So if I have an account as a bank and I'm creating tokens to be able to access that account, I can build my security and be directly in charge for that security. Now, if you create a token that is not entirely within the control of the bank, and that token is able to access transactions within my bank, then there needs to be some conversation around how do we secure that? How do we agree some common security standards to make sure that my account is not exposed when somebody else accesses it using a token like BVN. But again, Christabel, I think you might have some additional thoughts.
Thank you, Akim. We actually always believe that the BVN question is always a trap. Again, that's from the fact that BVN is actually that of the customer. It's the customer that owns his BVN. And so, again, we support the banking industry with BVN. There's been so much cry about third-party access to BVN. And today, actually, we have APIs to consume the BVN service. We have validation portals. It's about third parties here, and the ecosystem we say is huge. So is the access point to who that is actually the question? But then the question to the Shego or Sam, I think, you're asking why we can't make it available to just anybody on a platform. We have dependencies, I can put it out there, and that is around the customer consent. So if we're going with the new NIMC, NIN, and all the interpretation around convolution of all the biometric data source, then of course it behoves on all of us that hold such data to protect that customer. When we're able to do that very well, I'm sure it will be a thing of the past. With the support of CBN, we will get there certainly. We're just testing the waters now. I'm sure it will be out there very soon. Thank you.
Thank you very much, Mr. Ejekwe. There are a few more questions. There's one from Jude Monnier, and Mr. Ademola, if you could step in to help us with that, I would appreciate. And it says, what stable digital strategy would you prefer, if any, for digital revolution in the areas of process to be improved, technologies to be implemented, and software solutions to support the digital transformation that we talk about today? Would you like me to take that again? Or?
Yes, no, it's okay. I can see it on the screen. Thank you, and thank you, Mr. Jude Moye, for the question. I think that, when you look at digital strategy, for these three things, because if you look at, what he said here is around the processes, technologies, and solutions. What we advocate at KPMG is that, take an outside-in view, all right, not an inside-out view. The starting point is the customer. And so, from that customer starting point, the strategy then comes inwards from there. So for instance, if you look at processes, if you start from the customer, you can have a really good prioritization of the processes that need attention from a digital perspective. And I'll give you examples. So if today you don't have processes that empower the customers to request for their cards, their debit cards online. If you don't have processes that empower them to control it, I can turn on my card here and turn it off. I can turn on my card so that it works when I'm in a jurisdiction, and turn it off. Those are all related to processes, all right? And Akeem and I think Christabel also started to talk about this within the bank that need to accommodate that service to the customer. So the thinking is started from the customer and then work it inwards towards the bank, towards the inside, of the organization. We also call it, the connected enterprise. Everything that the customer experience ultimately is the sum total of the connectedness of the organization. When organizations are not connected, banks or any organization, it affects experience. The other point that I think is important on technology, which I really think is an important conversation we need to have, as a country, is around the cost of technology. If you look at the segment of our population and their earning power, you will begin to ask questions on, our ability to afford, leading edge technology, costly technology. So because a vendor or a technology is used in the US or in Europe, you may not be able to use it in this market because we just don't have that earning power. And we need to be, digital gives us the opportunity to start looking at homegrown solutions, all right, to start intentionally investing in people. And I say this again, with very practical experiences. So almost all of the leading digital software that we use to create applications are open source, all right? So you name the source, most of them are open source. Python, for instance, you will hear when it comes to analytics, JavaScript, a lot of these are open source. So what we need to then do, since the source is open, is really invest in, ensuring that we're developing talent intentionally and giving them the opportunity to create homegrown solutions. I think this is key for us to really have a sustainable digital strategy. And very closely tied to that is also a conversation I believe we need to have around the cloud. As a country, if you look at what's happened over the last few years, and the Association of the Banks is in a very powerful place here. I'm seeing the global tech giants, we're seeing them open up data centers in Africa. But the data centers are not in Nigeria. And yet, we are, Africa's giants, we have the largest population. So why are the investments not coming here? So again, we need to, because obviously cloud and its benefits really, we're in the cloud anyway. Almost all of us here, even if you are not in the cloud as an organization, you do Gmail and so on and so forth. So we're all in the cloud. The conversation we need to have nationally is how do we also, create the environment so that we begin to have some of these global data centers in our markets and ensuring that we're part of this evolution as people start talking about data sovereignty, national security issues around data privacy. We have a solution, we have a thinking around it, all right? So those are the things that I would say is largely from a customer perspective inwards, is ensuring that you are careful with committing yourself to bleeding edge technology. I would say adopt open source technology. And, of course, as we said earlier, building with digital trust is extremely important. That whole wrapping it up around cybersecurity, because these investments can very quickly, dissolve if you have breaches that are not well managed.
Thank you very much, Mr. Ademola. I think the next question I think maybe Mr. Lawal, you're best placed, especially considering, the insights you shared around the 4 forces driving digital transformation. And it's a question that reads as follows, again by Jude Monnier, says, where do you consider people behind the processes, domains, and disciplines in this whole process of digital revolution?
Thanks, Shagun. I think the answer is that is the backbone, right? People are the backbone. It's the basis on which everything else has to be built. But to dig a little bit deeper into that answer, the people actually start from the executives and the directors or people who set the direction of the bank, right? I think digital transformation from there to understand that the business that we are responsible for and the value that we need to deliver not only to customers but to shareholders could be significantly eroded if we do not go on a journey to modernize our business, to build a digital ready organization, right? So so I spent the early part of this year engaging at C-level across many banks, just talking to them about our view of digital disruption and some of the imperatives for banks going into the future, and what could happen if nothing really is done, and what could happen if something is done and banks are successful. So I think that's number one. Within the organization itself, you need to build competencies in many different areas. You need to build competencies in data analytics and data scientists, artificial intelligence, robotics engineers. You need to start having the conversations around having customer experience officers and customer experience and UX designers. Obviously, data analysts, digital visualization. These are concepts and skills that are absolutely crucial for the organization. And I think there is a concept that KPMG shared, which I liked a lot, is this concept of connected enterprise. And one of the things I took out of it is just understanding that building a organization is more than just building digital products or front ends, right? And the example I like to give is you cannot say you're building a digital strategy by building a digital product, but all of the processes that need to support that digital product are all manual or analog. Right, so the enterprise is connected to deliver value, and you have to digitize the entire organization by making sure that every part of the organization and all the people in that value chain understand why it's important to be digital. But you then need to run into the problem of, if we automate, am I going to lose my job? And I can share an experience that we've had as InterSwitch, right? We've spent the last few years making a lot of organizational processes to try and improve efficiency. We have not to let anyone go. What we found is that the organization is constantly demanding resources in various areas. And we've invested a lot of time and effort in repurposing the people that have been made redundant to other areas, training them with new skills and allowing them to take on roles they can add more value to the organization because their jobs have been replaced by robotic process automation. And I think that's also an important concentration. Shagun.
Thank you very much, Mr. Lawal. That's interesting insight there. Ms. Onyejekwe, we do have, we will accommodate this. I have one question I would like you to shed some light on. And it's again from Jude Monnier, and it says, what advice do you have for banks and other organizations that are experiencing digital fatigue even during the pandemic? Mr. Ejekwe.
Thanks, Shegun. I think we get this question pretty often, especially now. And clearly to my mind, it's like around usually the digital strategy. If a bank that is older, we have legacy system banks. We have the ones that are newer. We have the, very recent ones. So it depends on wherever you play in the ecosystem. So I think first and foremost is the digital vision and strategy of the bank must be watertight. It has to cut across. There's something that is put out there that around you must be willing to shape, must be willing to shift, and you must be willing to share. Your business concept is not cast in iron, so you must be able to drill down to all connect, all nodes in the organization must be alive to your digital vision. I mean, because it's coming from Jude Moy, I know the bank, but we're talking about maybe if you look at a first bank, with due respect to them, we know they're over 100 years, but look, today they're very nimble because they took time to scale up and they're currently in the right place now to feature in the digital revolution. They even have a very active digital lab. So clearly there are a lot of things that will come to play. But more importantly is to speak to improving your internal efficiencies. SLAs must be drawn across both internal and external customers, must be able to know what to deliver, and TATs must be measured by tools. Digital tools are all out there. It's not the time, I think the chair spoke to it. We should not fight shy of investing in our people and our tools. The tools, yes, they are very expensive, but they're the only thing that will actualize digital revolution. And then we believe you can strengthen your core. If your APIs, APIs for third-party integration is not in play yet, I guess you should begin to work on that. There is also the organizing for change, because change is constant. So you have to train your staff, invest in tools. At the same time, if you don't have the wherewithal, the know-how, pandemic took everybody by storm. So it's like on your mark, said, go across. So you have to know. If you don't know, you get partners, seek out partners, seek out consultants. And then ask them to show you the way. Being the leader, you lead it up, but measurable and forcefully get your team to be part of the evolution. That would be my advice. Thank you.
Yeah, Shegun, if I may add a sentence also as well. So I think the answer to such banks really is to look at their performance versus the performance of others who've adopted digital strategy within the last 6 months. We've run an analysis of banks' performance over the last 6 months, and there is a clear distinction in performance between banks who were digital ready and the banks who were not. And this is in orders of magnitudes of difference across the various products and channels. Thanks, Chairman.
Thank you, Akim, and thank you, Ms. Onyejekwe, for that. I think we have to start rounding up today's discussion. But before before I yield back to the MC, I will take the final set of questions, 1 minute each to each of our panelists. Mr. Ademola, I'll start with you. And it's a simple question. What is your view on the opportunities that lie ahead in the fourth industrial revolution?
For me, I think is growth, accelerated growth. For the organizations that get their digital strategy right, particularly from an execution perspective, the possibilities for growth are enormous. I think the customers are in for, very good times. I think customers are going to enjoy a proliferation of products and services at very good deals in the days that are ahead. And lastly, for me, I think is again, how the whole industry will pan out is really going to be important. How we manage the concept of trust, the concepts around cybersecurity and managing risk as the digital itself continues to evolve. Those would be my thoughts, going forward.
Thank you very much, Mr. Ademola. Mr. Lawal, how do you think banks and FSIs can create additional value in the fourth industrial revolution?
I think I will share two thoughts. The first really is around customer segments. So in addition to the customer segments that banks are currently serving, which Mr. Chonobi spoke to in depth, I think there are two customer segments where there is opportunity and value to be created, right? One is in this, the people that live and do business and trade on social media, right? It's a market of over 40 million plus people, and opportunities existing that are currently largely untapped. The second market segment that I think is of extreme importance is what we are calling the open markets, right? And again, these are largely unserved. These are the people who are merchants in open markets, traders, again, are largely unbanked or in the banks, but they move a significant portion of this country's GDP in terms of the amount of transactions that they do. And I think those two segments are open opportunities. However, we're finding that there is one thing that could unlock that value. And I do believe that the Association of Banks, probably with the aid of the regulation, or definitely with the aid of the regulation, can deal with, is this concept of digital identity and digital KYC, right? I've argued for a long time that one of the reasons why we cannot grow beyond the 40 million odd customers banking is because we cannot meet the KYC requirements or the identity requirements for the remaining 60 or 70 million, right? I think the time is now to start to think about how do we create a digital identity for the remaining 60 million bankable people so that we can offer them products and services in the way we do to the existing 40 million. And I think that should be an item or an initiative of the highest priority at this particular point in time. Thank you.
Thank you very much, Mr. Lawal. And Ms. Oyejekwe, what do you see as the largest enablers for growth in the fourth industrial revolution?
Thank you, Shegun. I will answer with a little story around IBM. I went for a program in Stanford Business School some 4 years back, and I met one of the directors there in IBM, and he said to me that IBM has been investing in the changing world for every 5 years. What they do is they have like 2,000 think tank developers, put them out in the remotest part of America, and they're to come up with ideas on what will change in the world in 5 years. If you recall, IBM used to be a hardware computer firm. It's currently a software computer firm. That is changed. Anyway, so the question about enablers is actually around awareness. I mean, we must be aware that we need change. And that is, if you look at before now, everybody, who needs an encyclopedia anymore when you have Google? Why would you go to Aswani market if you can buy anything online through e-commerce? Do you need the yellow cabs anymore? No, there's Uber, taxi, and I hear a new one, Barakete. Whatever that is speaking to is saying that changes have happened and the awareness is key. As you are attending to the customer, if we go with what Adeshonubi said, what is his changing needs and how do I get to be on top of that? The second one is active leadership. Again, Warren Buffett, I like to quote him quite a lot, says there are no mature businesses, only mature managers. And that is for those who don't take the right decision at the right time. For leaders, I will always use the word, you have to be ambidextrous in nature. That is a dynamic leader with the focus to recognize things and be very agile. It calls for that now because the world is changing rapidly. So it will be a major change for growth because it's an internal thing we're talking that comes to the outside. The last one will be on the network of digital ecosystem. Gartner said this is just the new black. So to get to this, you will have to be able to say, if technology has changed everything, is our technology speaking to the customer, the biggest asset we have around acquisition and retention? Is it speaking to finance? That's maintaining our shareholder value. And again, the capabilities about the people. The skill set, are we upping it? So I'm sure that for this, so that it becomes a practicable thing to implement, it's like it will certainly enable growth in the new world. Thank you.
Thank you very much, Mr. Onyedekwe. Ladies and gentlemen, Mrs. Demuren, thank you very much for your participation today. And of course, a big thank you to the organizing committee or the organizing team at the Business Directors Association of Nigeria for putting today's session together. Our panelists, thank you for making such knowledge and deep insight and experience available today. It is very encouraging to see how quickly we've shifted as humans to hold webinars like this to be very interactive, collaborative, and impactful. You know, so I think we all sitting here today deserve a pat on our backs for how quickly we've adapted to that change. Our platform, Alert by WEMA, was just announced as the mobile channel leader in the digital channel scorecard by KPMG for 2020. Rated on metrics like digital onboarding, payments and transfers, self-service, lending, and issue resolution. Of course, I'm happy to be here today. Besides the opportunity to learn what more we should focus on so we can keep winning and disrupting industry, one of my other joys being here today has been listening to and witnessing the transformation of Nigeria and Africa into a global powerhouse as a result of this same fourth industrial revolution. A lot of deep insight shared, some interesting experiences as well. I walk away today. I look forward to us collectively continuing to be active drivers of this transformation, creating a more equitable and stable world, moving value for a broader range of stakeholders, building great talent and workforce, and of course, leveraging technology all the way. Thank you for your participation today and have a great day ahead. Thank you very much.
Thank you.
MC.
Thank you so
much. Thank you so very much, Mr.
Thank you.
Denny. Thank you so very much for a wonderful moderating of the session. Indeed, you did a pretty good job, no doubt about that. Thank you so very much. And all our panel members, talking about Mr. Boya Demola, Christabel Onyedekwe, Akeem Lawal, beautiful insight you brought to the conversation. Thank you so very much for all of this. I have a few takeaways. I think I have for Mr. Demola where he says the possibility for growth are enormous within the space. I think I like that phrase. And then for Mr. Akeem, he says time is now for creating a digital identity for our teaming customer base. Pretty conversation there. And for Mrs. Onyedekwe, we must be aware that we need change. We need change. Yes, we must be aware that we need change. That is the conversation. Thank you once again, gentlemen. Thank you. We are almost wrapping up the session this day. At this point in time, let me call on our Mrs. Vice President, talking about Mrs. Fumi Oyetunji, to give us the vote of thanks.
Thank you very much for asking me to do that. But before I say thank you to everybody who has participated, I like to finish these summits and conferences with takeaways for bankers who would have attended. And I have just a few things that came from each of the presenters. Mr. Shonubi did reiterate the fact that technology is usually about who we are trying to serve. So it's customer experience and what we should be doing as bankers is for the bankers, not just for ourselves. However, the techies, Boye Ademola of KPMG and Mr. Lawal of InterSwitch, did let us know that this train, this digitalization train, is gathering speed globally and has become important. And it is a journey that we cannot afford to be left behind on, like we were in other revolutions. And therefore, as bankers, we need to take it very seriously. So what I have down here is that there are going to be growth opportunities. The growth opportunities are enormous for banks who get it right. Also, the cost management advantage of it is what we should be looking for while increasing our customer base. I like what Mr. Lawal told us about digital KYC and identity for onboarding. If we can get that, then the population is open to us for us to have more customers onboarded. Out of 200 million people, we're still struggling with 40 million. So that's 1 point for all of us to consider, being able to digitally onboard our customers. Also, finally, I think cybersecurity is one of the reasons we actually, it's where we started the conversation about this summit. And the point I take away is the fact that we need to intentionally build digital trust into our systems, and with efficient monitoring, also quick response is important, and response when anything goes wrong is very important in getting that digital trust going with our customers. On that note, I would like to say thank you to everybody who has come. Mr. Shonubi of Central Bank, we thank you for your insights and your encouragement of the banks getting more inclusive in its services. We thank Mr. Ademola of KPMG, Mrs. Oyejekwe of NIBS, and Mr. Lawal of InterSwitch for their contributions to what bankers should be looking at. I also thank Mr. Deni for his efficient moderation of the sessions. Finally, as BIDAN members, bank directors who are here attending, I hope that this summit, though virtual this year, has been both informative and thought-provoking as our physical conferences had been in the past. Thank you very much, everyone. I thank our council members for organizing such an informative session. Thank you, Madam President, for leading us, as usual, to a very good conference. Thank you.
All right. Thank you so very much, Madam Vice President, for that interesting insights too that you brought to the conversation. We appreciate that. Thank you so very much. And so, ladies and gentlemen, it's a wrap. Thank you for being a part of this conversation. We'll do this again next time, God willing. My name remains David Ubabudike, the business editor for Silabe Television. It was nice being your MC of the day. Have a great day. Enjoy the rest of the day. Bye for now.